Let's get this straight. People love gold jewelry. It's everywhere. Weddings, birthday parties, fancy dinners. It's a symbol of celebration and success. For thousands of years, humans have been drawn to its warm yellow glow. We wear it to feel good, to show our status, or to mark a special moment in our lives. It's a tradition that's passed down through generations. Your grandmother might have given your mother a gold necklace, and one day, that same necklace might be passed down to you. This connection to family and history is a huge part of why gold jewelry is so popular. It's more than just a piece of metal, it's a story. But here's the thing. Many people buy gold jewelry thinking it's a smart investment. They believe that while they get to enjoy wearing it, its value is also secretly growing in the background. It feels like a win-win situation. You get a beautiful accessory and a financial safety net all in one. The logic seems simple. Gold is valuable, so gold jewelry must be valuable too, right? This idea is so common that entire industries are built around it. Jewelers often market their pieces not just on their beauty, but on their investment potential. Let's get into it. Gold has been a big deal for a very, very long time. We're talking thousands of years. Ancient civilizations like the Egyptians were obsessed with it. They saw it as the skin or flesh of the gods. Pharaohs were buried in solid gold masks and coffins. They believed gold was eternal and divine. It didn't rust or corrode. It was rare and had a beautiful luster. This historical significance laid the foundation for gold's value. It wasn't just a shiny rock. It was a symbol of power, immortality, divine right. This ancient reverence is still baked into our modern perception of gold. Fast forward through history, gold's role evolves. It became the backbone of currency. The Lydians made gold coins around 600 BC, standardizing trade. For centuries, money's value was tied to gold, the gold standard. A dollar bill was essentially an IOU for gold in a vault. That link made gold the ultimate form of money. It was universally accepted and trusted. Today, gold is used beyond coins and jewelry. It's a critical component in modern technology. A small amount of gold is likely inside the device you're using now. From ancient tombs to modern electronics, this range gives gold enduring, stable value. So why do people really value gold jewelry? It boils down to three main reasons. Cultural, emotional, financial. First, the cultural pillar. Gold jewelry is deeply woven into society. India, China. It's not just an accessory, it's vital at major life events. Weddings, brides are often adorned with significant amounts of gold. It's seen as a blessing for prosperity and a form of financial security. Next up, the emotional pillar. This one is powerful. Gold jewelry is often a gift, anniversary, graduation, birth of a child. The piece becomes a tangible memory of a special person or moment. That gold ring isn't just a ring, it's a reminder of your wedding day. That simple pendant isn't just a pendant, it's the last gift you received from a loved one. Emotional attachment gives jewelry a personal value beyond market price. But the market doesn't pay for your memories. Now the third pillar, the financial one. People buy gold jewelry as a way to store wealth. When we talk about investing in gold, it's crucial to understand that not all gold is the same. The biggest distinction is between gold jewelry and gold bullion. Gold bullion refers to gold in its purest form, valued almost entirely for its weight and purity. This includes gold bars coins produced by government mints or reputable private refineries. When you buy bullion, you are paying a very small premium over the current market price of gold, known as the spot price. You are basically buying the raw material itself. Gold jewelry, on the other hand, is a completely different product. Yes, it contains gold, but its price is made up of many other factors. The biggest one is craftsmanship. Designing, molding, casting, polishing the piece. This labor costs money and it's added to the price. This is often called the making charge. Then there's the brand markup. So when you walk into a jewelry store and see a price tag, that number is just the beginning of the story. The price of a piece of gold jewelry is inflated by a series of costs that have very little to do with the gold itself. The most significant is the making charge, the fabrication cost. It's what the jeweler charges for labor and skill, turning raw gold into a necklace or ring. For simple machine-made chains, this cost might be relatively low. For intricate handmade designs with detailed patterns, the making charge can be enormous, sometimes even exceeding the value of the gold itself. This cost is pure expense. You will almost never get it back upon resale. On top of making charges, you have the retailer's markup. The jewelry store is a business with real expenses: rent in a nice mall, employee salaries, marketing, security. All of these overheads are passed on to you as retail markup. This markup can be anywhere from 50% to 300% over wholesale. Then come the taxes, sales tax, value-added tax (VAT). Taxes can add a significant percentage to the final price. So, you've enjoyed your gold jewelry for a few years and now you need some cash. You think, great, I have this valuable asset, I'll just sell it. This is where most people get a harsh reality check. Selling gold jewelry is nothing like selling a stock. Selling a gold coin. You can't just log into an account and sell at the current market price. You have to find a buyer. And that buyer wants to make a profit at your expense. The beautiful store where you bought your necklace will not buy it back for anything close to what you paid. They're in the business of selling new items at high markup, not buying used ones. Your most likely option? Pawn shop, local jeweler, we buy gold establishment. These buyers don't care about design, brand, or sentiment. They care about one thing, the melt value. Melt value = raw gold value if melted down. To calculate it, they'll weigh your jewelry. They'll test its purity. Carat. Then they'll offer you a percentage of the current spot price for that gold. The offers are almost always shockingly low. Most buyers offer between 60% and 80% of melt value. Example, necklace with $1,000 worth of gold. Buyer might offer you $700 for it. You probably paid $2,000 originally, so you sell a $2,000 purchase for $700. The price of gold is not static. It fluctuates daily, driven by global supply and demand, economic news, inflation rates, geopolitical tensions. When the economy is strong and stable, investors might sell gold to buy riskier assets like stocks, causing the price to drop. When there is fear of a recession, war, high inflation, investors flock to gold as a safe haven, driving the price up. This volatility affects the underlying value of your gold jewelry. If the spot price of gold doubles, the melt value of your jewelry also doubles. This is the core of the argument for jewelry as an investment. However, because of the massive premium you paid for the jewelry in the first place, these price swings have a muted effect on your actual return. Let's go back to our example. A necklace with $1,000 worth of gold that you bought for $2,000. For you to simply break even and get your $2,000 back by selling it for its melt value, the price of gold would need to double. But wait, we forgot that the buyer will only offer you about 70% of the melt value, so to get $2,000 cash in hand, the melt value would need to be closer to $2,850. This means the price of gold would need to almost triple just for you to get your original money back. This is the brutal math that jewelry investors face. While the price of gold can have dramatic bull runs, waiting for it to double or triple is a long-term game that can take decades, if it happens at all. During that time, your money is locked up in an illiquid asset that is earning no interest or dividends. So, after breaking it all down, let's answer the big question. Is gold jewelry a smart investment? The answer, for 99% of people, is a clear and simple no. Gold jewelry is not an investment. It is a consumer good. It is a luxury item. It is a wearable piece of art. It is a beautiful symbol of love and tradition. It is many wonderful things, but a smart financial investment is not one of them. The moment you buy a piece of gold jewelry from a retail store, you are losing a massive percentage of its value. If you want to invest in gold, there are far better ways to do it. Buy gold bullion, coins, buy bars, from a reputable dealer. The premiums are much lower, the pricing is transparent, and they are easy to sell at a price very close to the market rate. You could also consider a gold ETF, an exchange-traded fund, which allows you to invest in gold through the stock market. Buy gold jewelry because you love it. Buy it to celebrate a special occasion. Buy it to wear and enjoy. Buy it to pass down to your children as a family heirloom. Set a budget for it as you would for any other discretionary expense. But please do not buy it with the primary goal of making money. It is not.